Do you often find that with a small trading account, you have difficulty placing trades on charts like daily or weekly or monthly charts that need a bigger stop loss size, and therefore you cannot take the trades? If that's you, listen up. I've got some great tips and information to share with you. Let's get into it right now. Hey there traders, Andrew here at the Forex Trading Coach with video and podcast number 584. So I want to talk about people with small trading accounts, because a lot of the times I hear people say to me, look, I can't take those longer time frame charts. I can't take trades on daily charts or weekly charts or monthly charts because I don't have a big enough account size to allow for a big stop loss. And unfortunately, it's a bit of a common misconception that people think they cannot trade on those higher time frame charts, which, by the way, are quite often some of the better trades to take because of the quality of the trades. And that people think they cannot trade them because they require too big a stop loss and their account's not big enough to allow for that. So the issue actually comes down to understanding risk and understanding how to calculate your stop loss correctly. Because most people don't do that. A lot of people say, I'm just going to put on 0.1 lots or 1.0 lots or 0.5, whatever it might be. They just put the same lot size on every trade. And if you do that, the problem is either, one, that when it gets stopped out, the stop loss amount is going to be way too much. And so therefore it could outdo lots of smaller gains. And that again comes down to not understanding how to calculate your lot size correctly. Now, to help you out, I'm going to put a link here which you'll find to my free lot size calculator. You can download my MT4 or MT5 lot size calculator. It's a script, put it on your charts and you'll use it all the time and it will massively help you. But the issue becomes, let's say you have a monthly chart trade. It requires, we can make up some numbers, a 200 pip stop loss. And someone goes, oh, I can't take it because my account's not big enough. You probably can. You might end up needing, let's say, a 0.01 lot size, but you can still take the trade. And the reason it needs to be a bigger stop loss is because it's all relative to the candle size and the market movement at the time. Now, you take that down to let's say, a 1 hour chart trade where obviously the movements are a lot smaller and the stop loss needs to be a lot tighter. It might, again, for ease of numbers, let's say it has a 20 pip stop loss. The monthly chart has 200 pips stop loss. The hour chart has a 20 pip stop loss. All it means is on your 1 hour chart, you're probably going to be trading with 10 times the lot size. The risk is still the same. So you're not trading at 10 times the risk. The risk in terms of the percentage of your account remains the same. It's just the lot size might be 0.1 lots on your 1 hour chart, whereas on your monthly chart, it might be 0.01 lots. You see, it's just a 10 times increase in the size of the position because the stop loss, again, assuming it's the same pair and your account size remains much the same, a lot of assumptions, but just to give you a generalization, your stop loss becomes 10 times smaller, therefore your lot size becomes 10 times bigger. The risk is still the same. And that's how you can trade according to any time frame chart and any stop loss size. So use my lot size calculator. It will massively help you, because if you're not taking trades on longer time frame charts and you think it's due to your small account size, you're really missing out on really good opportunities. Now, when it comes to profits on those trades, again, we trade according to candle size, the market movement at the time, and it's all relative. So again, to use some very basic numbers, let's say on your monthly chart trade, your profit target, it was 600 pips. And that's 3 times 200, obviously. It's not 600 pips just because it's 3 times. I'm giving you some basic numbers here. But let's say on your 1 hour chart, it was a 60 pip profit target with a 20 pip stop loss. You see how both trades have the same risk in terms of percentage and both have the same reward to risk. They both have a 3-to-1 reward to risk. Now, for a 60 pip movement on a 1 hour chart, with a 20 pip stop loss, that's giving you plenty of room to move. Likewise, on a monthly chart where you're going to need even more room to move, but you're going to get bigger movements up and against you and in your direction. Your 600 pip stop for your 200 pip stop your 600 pip profit for your 200 pip stop is still a 3-to-1 reward to risk trade. So you see how it's all relative. Let's say one trade works and the other doesn't matter which way around it is. The trade that loses is going to lose, let's say, 1% on your account, and the other one that makes is going to make a 3% account gain, net 2%, even though you've won one of the trades and lost one of the trades. So it's really important that you understand risk to reward, and it also is important to allow you to take trades on these bigger time frame charts with the bigger stop losses, that you understand your lot size calculation correctly so that every trade has low, equal, controlled and known risk. So as mentioned, there will be a link here somewhere that you can find to download my MT4 or MT5 lot size calculator script. It's really important you do that. So if you'd like to find out more about how we trade and how we can help you, click on the link here that you'll find for my 17-minute on-demand masterclass. If you'd like to book a call to have a chat with one of us about how we trade and how we can help you, I'll put a link to that as well. And if you're out there looking for a very, very good broker who offer the MT4 and the MT5 platform with a massive array of different markets, especially on MT5, and of course more built-in time frame charts on MT5. Great bunch of people, very great, excellent spreads, great customer service, accounts in multiple currencies and denominations. Click on the link here to find out more about Blueberry Markets. I've been with them for a long, long time, as have thousands of people who I've sent to them, and the feedback is always the same. It's always so good about how good they are to trade with and how good they are to deal with as well. So have a look at Blueberry Markets if you're out there looking for a good broker. So this is Andrew Mitchem at the Forex Trading Coach. Don't forget to like and subscribe if you're watching on social media or YouTube, or share the video around or the podcast around. Any questions you have, please email me and I will personally answer them, Andrew@theforextradingcoach.com. See you this time next week. Bye for now.